This LOS is analyze and interpret financial statement disclosures regarding property, plant, and equipment and intangible assets. Presentation and disclosures. Under IFRS, for each class of property, plant, and equipment, a company must disclose the measurement basis, the depreciation method, the useful lives, or equivalently the depreciation rate used, the gross carrying amount and the accumulated depreciation at the beginning and end of the period, and a reconciliation of the carrying amount at the beginning and end of the period. In addition, disclosures of restrictions on title and pledges as security of property, plant, and equipment, and contractual agreements to acquire property, plant, and equipment are required. If the revaluation model is used, the date of revaluation, details of how the fair value was obtained, the carrying amount under the cost model, and the revaluation surplus must be disclosed. The disclosure requirements under U.S. GAAP are less exhaustive. A company must disclose the depreciation expense for the period, the balances of major classes of depreciable assets, accumulated depreciation by major classes or in total, and a general description of the depreciation method or methods used in computing depreciation expense with respect to the major classes of depreciable assets. Under IFRS, for each class of intangible assets, a company must disclose whether the useful lives are indefinite or finite. If finite, for each class of intangible asset, a company must disclose the useful lives, or equivalently the amortization rate used, the amortization methods used, the gross carrying amount, and the accumulated amortization at the beginning and end of the period, where amortization is included on the income statement, and a reconciliation of the carrying amount at the beginning and end of the period. Under U.S. GAAP, companies are required to disclose the gross carrying amounts and accumulated amortization in total and by major class of intangible assets, the aggregate amortization expense for the period, and the estimated amortization expense for the next 5 fiscal years. So that's an interesting little fact there. The disclosures related to impairment losses also differ under IFRS and U.S. GAAP. Under IFRS, a company must disclose for each class of assets the amounts of impairment losses and reversals of impairment losses recognized in the period and where those are recognized on the financial statements. Under U.S. GAAP, there is no reversal of impairment losses. The company must disclose a description of the impaired asset, what led to the impairment, the method of determining fair value, the amount of the impairment loss, and where the loss is recognized on the financial statements. Disclosures about long-lived assets appear throughout the financial statements, in the balance sheet, the income statement, the statement of cash flows, and the notes. The balance sheet reports the carrying value of the asset. For the income statement, depreciation expense may or may not appear as a separate line item. The statement of cash flows reflects acquisitions and disposals of fixed assets in the investing section. In addition, when prepared using the indirect method, the statement of cash flows typically shows depreciation expense, or depreciation plus amortization, as a line item in the adjustments of net income to cash flow from operations. Recall, we add back depreciation and amortizations. The notes to the financial statements describe the company's accounting methods, the range of estimated useful lives, historical costs by main category of fixed asset, accumulated depreciation, and annual depreciation expense. And that's the last slide for this LOS. Thank you.